Happy Monday to you. Welcome to Trading with Technical Indicators. My name is James Boyd. Alongside me is Rachel Dashel in the chat. You guys know her. You actually see her in the morning with Kevin Horner typically on Trader Talks. And we welcome her and we welcome all of you here today. We got Will with us. We got Jeff with us. We got Gary with us, Heather, Ray, Robin, Randy, Paul, and many others, Elena, and welcome to all. I threw a barbecue bash for the neighborhood on Saturday, so luckily I don't smell like smoke still. But it was a great time with neighbors. About 80 of us gathered on Saturday. Brisket, pulled pork, and chicken thighs and drumsticks. Just good neighborhood get together. So it's a good thing to reach out to your neighbors and just kind of share a meal with them. That's what I did, and had some family time yesterday as well. We're right back at it. Let's go get started here. Now remember, you can follow Rachel or myself and any of us coaches on X. We do post educational content. There's my handle at James Boyd CS. Now, just real quick as we get started, the information we talk about here today is provided for general informational purposes only. Should not be considered an individualized recommendation. They're examples, okay? And also remember, when we talk about, we'll talk about stocks, we'll also talk about options. Remember, there's pros and cons of stocks and options. And if we talk about options, remember that options carry a high level of risk and are not suitable for all investors. Understand that options really have different strategies. They're not all the same. And that's kind of what's unique about them. You get to decide if you want to maybe consider those and which strategies you would consider for yourself. As a question to you, just real quick, which strategies do you like? Let me know. Now, just real quick as we get started, remember when we talk about examples, we will do those on the Paper Money software application. We do that for educational purposes so we can kind of learn about technical analysis, picking strategies, see good trades and bad trades, and we talk about those each time we have a class. Now, also remember when we talk about investing, investing involves risk. We like the reward, but with that potential reward or potential loss, there's risk, okay? So a lot of investors kind of like to set position size limits, maybe how much they're willing to risk or how much percentage loss of the portfolio, etc. This is really important, okay? Until someone kind of gets comfortable with this, and it's okay to start small, it's hard to trade the trends because you're not comfortable, okay? And it's okay to start with a small number. Now, today we'll talk about kind of markets in general to start off. We'll talk equities first, markets, then we'll talk about sectors and maybe some industry groups as well. And then we're going to talk about, I want to kind of focus a little bit on diagonal resistance breakouts. Now, there's a couple charts here that are kind of showing that pattern. Now, just to hit it immediately, if we said, what are diagonal breakouts? They are flags, okay? A little unique, though, because when we talk about diagonal breakouts, they could also be like diagonal resistance breakouts. And we know that resistance breakouts are not just horizontal, okay? So when you think about diagonal breakouts, we're really talking about resistance breakouts, but also flags, okay? And by the way, they could also be crossovers as well. Now, let's go ahead and just hop right in. And remember, when we talk about kind of where the market is in general, we like to kind of just pull up just a grid, okay? I just have a list of indexes here. And what you're now going to notice is I'll highlight the cash indexes, SPX, NDX, RUT, and DJX. And what we're just kind of looking to kind of get a sense of real quick is what type of trend do we have? So when we look at that trend, we're still in that green color. I could hear someone say hallelujah, okay? Now remember, trend 3 is just the price above both moving averages. The 10-day exponential, 30-day simple moving average. Now remember, not just on the daily chart, we're actually seeing that on the weekly chart as well. Now the reason why we categorize the trend is people will smear the technical analysis. We don't like that. So we want to have a way to categorize it and actually try to put on trades, strategies that match the trend. That's not based upon personal feeling, okay? Now, if you look at this and kind of said, and this is a question to you, of the 4 indices, which one or two has really been the strongest compared to the S&P 500? Which one? Well, if we kind of pull this up, Dow has kind of lagged a little bit, okay? There's the Dow, there's the Russell. And if we kind of said which really, I mean, over multiple different time periods, whether it's 5 days, 10 days, 21 days, 42 days, 63 days, and so on, which two have actually, or one or two, have actually kind of been the strongest. You're going to have to say that it's really going to be NASDAQ and the S&P 500. If you said that, ding, 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 ding. Now, if you're saying the S&P 500, what are you saying? Tilt towards technology, a tilt towards communications and discretionaries, a tilt towards financials, okay? Those three sectors really make up 45% of the S&P 500, okay? So obviously those kind of go hand in hand a little bit. Now, are we saying that the Russell and the Dow is horrible? Of course not, okay? Now, if we said the NASDAQ is strong, the semiconductors is right in there. Let me kind of mark this. I'll mark it sideways. Semiconductors have been quite strong again. Now, we're going to also include a couple things I want to kind of say. Did anybody see the move, probably middle of the day, to the close on gold and silver on Friday? Did anyone see that? Did anybody? I can't hear you. Okay? Just scream louder. All right. Now, did gold or silver follow that move from Friday? It did, okay? So we kind of had an interesting snapback rally in gold and silver, not just in the price of gold and silver. It was also in, let's say, some of the gold stocks as well, in some of those groups. Now, just real quick, let me actually bring up, I'm going to bring up let's go IXT just real quick. And if we bring up just real quick IXT, obviously if we're talking about technology, I'm just going to speak to just two main sectors, okay? There's really the technology sector. This is the index product. And if we actually look at the SOX product, you're going to see that that also hit a brand new high. So when we talked about last week, and it's not a new theme, the semiconductors recently exploding really above that 58.90 threshold, man, some of those stocks, which include MU, okay, LRCX, Micron, CLAC, etc., those have actually continued to have a pretty good pop. Now, we made a question last week on Thursday or Friday regarding NVIDIA. I'm going to come to that in our first trade example in just a moment. Is there any other sector that has stood out here today that you would like to make mention and say, James, don't forget? Well, one of the ones that kind of has stood out a little bit, and we'll kind of bring it up, is the DJT. Okay, now this is where we kind of see some differences here. The DJT is we're using this as an index to the transports. If someone uses a different product that has a different weighting, it shows differently. I'm going to make mention of the transports. Okay, now if we say transports, we could also say industrials. Okay, similar. So I want us to kind of keep an eye on the transports here. And I'm just kind of taking a peek myself. What would we do without an iPad? If we actually pull up the transports, and I'm just looking to see where this is right at this second. If I looked at the sectors and said, okay, are the transports, where are those? We're actually going to notice that space, and you could use the product that you want. It shows a little bit different. It shows a shorter term high, on the transports. Now remember, if we actually pull up transports and we ask ourselves the question, Mark, watch, visualize, and we pull up, let's say, the S&P 500, of course we would really be looking at, now remember, when I say transports, think industrials too. When we look down at see the market watch, visualize S&P 500, and we come down to this section of, let's say, industrials, you're going to see a couple choo-choo trains, UNP, NSC, Uber, and so on. Uber is really one of the biggest holdings in really the space of transports. So that's going to be something we watch because the paper money account has shares of that. Could that continue? We'll come back to that in just a sec. But I think that's noteworthy to bring up. That's an area that's kind of gone sideways, but might it try to push up again? Okay. Now let's kind of pull back to this. Now let's kind of look at this. We got this in the technology space. You got Apple, Samsung lovers. It's okay to actually be happy for Apple. Say that you are. That's tough. And then you actually got NVIDIA. Okay. Let's talk. And by the way, you're also going to see in here, you got Oracle. Okay. Now let's kind of just real quick go to NVIDIA. Now our theme of what we want to kind of bring up here today is taking a look at some like diagonal resistance. Okay. Now, if you take a look at this, the diagonal line really kind of stems from lower highs over time. Great. Now, what's kind of interesting is what might tell us that maybe this might be starting to reverse. Does anybody have an answer to that? What might kind of tell us that maybe the chances are high that this might reverse back to the upside? When we talked about this last week, we actually said, hey, if the neighborhood is going up, when I say neighborhood, I could say sector or industry groups. If the sector or industry group is going up, and maybe this is one of the stocks in that neighborhood as well, it might try to drag the lagger, the one that's behind the other ones, to the upside. We kind of question that. And this is why some people like to do this. Now, what you're now going to notice is, and it doesn't guarantee that it's going to drag it up with the others, but it might. But if you take a look at this, if number two thing we would be thinking about is, are the prices really making lower lows or are they making higher lows? And if we start to, for example, really make higher lows on the chart, we're kind of pressing into resistance. Okay? So what's kind of odd on the chart is you really have like lower highs and you actually have higher lows. Now, you could kind of think of that as a symmetrical triangle, pennant, all the above, and you kind of get to the point where it could potentially squeeze. Now, what investors actually do is, A, they can manually watch it, set the alerts. Number two, they actually might say, James, I'm going to set a buy stop on maybe a position. If it gets 1 or 2% above the area of resistance. Third, they might just say, look, James, I'm going to buy some inside the triangle itself and then add if I get a breakout. Those are all ways that the investor could try to trade it. Now, if you take a look at this, what I want to do is I want to go back to kind of where it is right now. Now, this is where we were going into what? Friday. There's the 19th. And then we actually take a look at today. And then all of a sudden, the candle looks like the Eiffel Tower. Now, it wouldn't be very hard. So if you had an alert set, and by the way, if you just had on the left-hand side a list of the Dow Jones stocks, there was two horses way out front called NVIDIA and Apple to the upside. Down the stretch they come. It wouldn't be very hard to see that if you had your platform lined up and you were organized. Unbelievable if you did. Not really. But the biggest actually thing is that one slicing its way through resistance. Now, we might say things like, we're too late. Now, is that true? Are we too late? Okay. Do you think everyone just kind of got in today and if you make a higher high, then it just could collapse? It could. But if you make a higher high, the greatest probability is a higher low. Okay. Now, I want to go back to this. Why do we call this like a bull flag? Well, we actually pull this back up. What you're now going to notice is, and I want to say something before we do this for just a second. When we look at a diagonal resistance, the minimum length of time that we would ever say the words diagonal resistance would be 9 or 10 days. That's the minimum length of time, okay? It's not a 2-day resistance. It's not a 3-day resistance, okay? 9 to 10 days. So that way we can get some data points, candles, kind of hitting resistance. And again, we like to draw lines from the bodies of candles, okay? Now, if you take a look at this, why do we call this really a flag? Or our Canadian friends call it a fleeg, okay? Well, here's the deal. If you actually look at this, and I could go back further, but we don't need to. But if you look at this, we have a big, massive pull. What you're now going to really see on that low, 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 there's the bottom of the flag, right? And then what you're going to see is really over time, we've kind of been carving out this area of resistance. Now, a lot of times people think that I got to get 25 stocks to be going to the upside. That's not true. Like, it'd help if maybe the investor might have 2 or 3 of them, okay? And they weren't just doing vertical put spreads where you actually have a max gain of $1, okay? Now, this is why some people like to actually trade long calls, stock positions, long synthetics, something that has a higher delta. Sensitivity to that directional move, and especially if they got it right, it could be interesting. Now, what we're going to show in this case is, let's say the investor said, James, I like to sell pets. And I want to sell a put with maybe the intention, on purpose, of actually getting long the shares at the strike price. Okay? Now, what does that even mean? What did I just say? Well, if someone said that to me, I'd be thinking, man, they might be selling in the money. They might be selling at the money. Why? Well, they're going to get a bigger credit. Second, they're actually trying to buy the shares at the strike price. They don't mind in buying those shares. In that case, it's not as much about the probability of being expiring out of the money. They're trying to get long the shares of the stock. They also think that the technical analysis is quite bullish and it might continue. Now, let's kind of show this. Let's go to the trade page. And what I'm going to do is I'm going to pull this up. We're going to go right to the trade tab. And what we're going to do here is we're going to go just type in NVIDIA right there. And now what I'm going to do is I'm going to pull up NVDA right in the paper money account. I'm going to go to the market margin. I can't do that because we kind of spent some capital on Friday. And I'm going to go down to the IRA because I think that's where we could have a little capital left over. Now, what I'm going to do in this case example is we're going to go back to looking at the expirations. And this is where you cannot assume that what happened last week is the same as this week. Liquidity can change, of course. Now, what I'm going to do is, let's say the investor said, James, I want to sell something that has a higher delta. Well, so if we sold the 182.50 strike, there's a 47% chance the stock could be below that. Hence, the premium is bigger. If we sold the 180, which we're going to do, we're going to sell the 180 with a 41 delta, which is the statistical likelihood of the stock being below that strike by a penny. Now, why did you choose does anybody know why we chose the 180? We chose the 180 because the open interest right there was 26,000. The open interest right here was 0. Now, given the volume here today of 1,400, tomorrow, that open interest should be higher. They might have just opened up these strikes today, which it looks like they did. Now, what I'm going to do is we're going to sell the 180. Now, if we did more of a cash secured put, we know that we can buy a put out of the money farther. So example given, okay? On a vertical spread, it might be a $1 wide spread, a $2.50 wide spread, a $5 wide spread, a $10 wide spread. Example given this previous NVIDIA position. But what we're going to do is we're going to buy a put wider. Now, when we do this, how do we pick a strike below? Well, we tend to actually go down to maybe a delta 10 or less, and the one that actually has a delta 10 or less is the 160. So what you immediately notice, James, it kind of looks like you widen out that spread wider than a typical vertical spread. Ding, 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 that is correct. There's some reasons why we do this is we want to make sure there's a max loss on the trade, number one. Number two, where we also, for example, have a defined risk, same thing as we first said. The other thing about this is we're trying to actually not tie up as much buying power. If we don't actually buy that 160 put, it's going to make the paid money account set more capital aside to do the position. Now, when you buy the put, you've got to pay for it, okay? It's 99 cents plus the commission. So you got to weigh the pros and the cons. Many investors might say, I see more pros than cons. It's up to you to decide. We're going to go confirm and send. And then how much money needs to be set aside to do the position? Answer. About whatever the max loss is. $1,537, okay? Now, if you take a look at this. Now, Grant actually says, are we talking about option contracts here? Well, so let's imagine that the investor said, hey, look, this 1537 represents the max loss. If what? If the stock closes below 180. Is that right? That's not right. Okay, tricked you. I hope I didn't catch you sleeping. Okay, well, now that's if it closes below the 160. Okay, now what's the odds of the stock closing below 160? 10% chance. So when we actually look at that, now that's 10% chance of at expiration or as of today. As of today. Now, if you take a look at this, if we took a look and said, okay, this 1537, there's a 10% chance the loss could be 1537, and we're talking about at expiration. Okay. So now that might be bigger than what we normally are willing to risk, but you just got to remember is that's saying that it closes below 160 at expiration. Now we can't do 2, 3, 4 contracts. Okay. The other thing to remember is wonder if we were assigned the shares of the stock. What does that even mean? Well, if you were assigned the shares of stock prior to expiration or expiration means the investor bought 100 shares of stock at 180. Okay. That can happen. prior to expiration. We're talking about American options here. And so you also got to think if the paper money account was assigned to buy the shares, once the investor owns the shares, they can hold the shares, try to sell some of the shares, sell all the shares. They're their shares. Like any stock position, observe what the liquidity is and choose what you want to do. Just because you get assigned doesn't mean you have to hold those shares. Okay? We're going to go ahead and trade number one. We're going to send the trade. Now, I'm going to go back and look at this just really quick. I'm going to pull up NVIDIA for just a second. Now, some of us are Fibonacci people, okay? Now, if we pull up this, the reason why I want to kind of pull up Fibonacci is we can also kind of set like an extension target. Some of us like to use kind of the previous levels of resistance and then draw down to where it went down to, the body of the candle, and then extend to see where the potential target is. We'll speak to that for just a moment. And if we look at this and kind of said, where do we really see resistance on the chart? It's really about right there, most of the touches. And then where do we drop down to? Body of the candle. It's really that day right there. And if we kind of said, what might be the potential targets if it went to the upside, and I'll kind of zoom in on this, and I don't have any more, so we'll kind of add those. 161 would be 192. If we added the 200 and the 261, which we will now, and I'll put those on there. We got the 2, okay? And if you don't mind, I'm going to put the 261 on so we can see that. And now if we look at those, if you said, where's the 161, 200, and the 261, those are those levels right there. Now, if the SOX continues to go to the upside, NVIDIA might get the push. When you look at Micron, I mean, I'm not sure if I've seen this stuff since maybe 1999. Okay, now I was around in 1999. Okay, I literally remember I was in college and stocks would just go, massively to the upside. You get Micron that's made a big move. Now here's the deal. What's kind of maybe leading us to think NVIDIA? Well, some of these stocks have had a big, massive move where those moving averages have been really painted in that green color for a while. This is where it's kind of interesting. People think they have to have a special indicator. You are the special indicator. And the special indicator trades what they see on the chart. You are the indicator, okay? You are the indicator in terms of reading the charts. So if we look at this, what you're going to notice is it's not just those two. When we actually go back to, let's say, other ones, I'll mention LRCX. That's another one. I mean, sometimes these ones that have exploded to the upside, which is more than not, if these start to pause, they might come back and play the catch-up trade, meaning maybe one or two of the names that really haven't moved as much. Now, I'm also going to go back to another one for just a second, okay? I'm going to go back to AMD for just a second, okay? Now, before we actually go there, are there any questions? Any questions? Okay? I'm just looking just real quick. Yeah, James Fitboyd, I appreciate that, okay? Now, there's a survey also in the chat. I'd like you to click on that so that way you could just bring it up. Let me kind of show you what that looks like for just a second. When you bring that up, it's just a quick survey, and it really is quick, okay? How likely, it just asks these questions. So I'm just going to hold this here. So really, there's two questions where you fill the bubble, and if you would also like to ask or add comments, you could add that as well. We read those all the time. A lot of my actually questions, classes I do, are based off your feedback. So thank you in advance. I'm just going to hold that right there. So you're going to see that in the chat, okay? Now, if I go back to this, I just want to see if there's anything that I missed for a moment. And I'm going to pull that chart back up. Yeah, the question was, what date on the NVIDIA option? Let's go back to that. Where can we see that? So if I put this back in the working orders, okay, so we're going to go back to the monitor tab where we monitor orders and positions. We're now going to go to the working orders, okay? And if it hasn't filled yet, we could actually see that right there. And it was the October 17. Why do we do that? Well, we tend to focus on monthly options with more than 20 days to expiration. That's why we chose that, Why did we choose the 180 versus the 182.50? It was liquidity, okay? Now, let's go back to something just real quick, and I want to kind of look at also an example of AMD. Now, why are you choosing this, okay? Well, it's the same idea that we talked about before, right? How can we actually start to see some stocks that are reversing? Now, have you ever seen a stock that's, you were watching, a week or two goes by and you said, dadgummit, I was watching that and then I just got so busy that I didn't see the move to the upside. Okay, I think we've all been there, okay? Now, when you draw these resistance lines, and I want to go back to this because we did this about 2 weeks ago. Now, remember on the chart, there's hold dots, okay? Those could also be signifying higher lows. If we actually go back to this chart for just a moment, you're going to see it says hold, close above the high of the low day, close below the low of the high day, okay? The really higher lows and lower highs, if you will, or higher highs. Could be both. What we're going to do is we're going to actually turn those on. Now, why? Well, if we're trying to really see diagonal resistance, it really comes down to how confident are you in your technical abilities to draw a line of resistance. Why does that even matter? Well, because your entry, your alert setup might be based off the line that you draw. So what I'm going to do is I'm going to assume that I know nothing, okay, which I'm very fine. I know nothing. So what you're now going to notice is you have the red dot and you have another red dot. Now remember, this is like in kindergarten or first grade where the teacher says, draw the line touching the dots. Well, all of a sudden, if I go from here to there, I really start to get what I call the angle of resistance. Now, some resistance marks can actually have more touches than that. I'll just kind of highlight that, highlight this one. Sometimes you could probably get another red dot right there and a red dot right here. He or she that touches the most red dots probably sees where the angle of resistance is. I try to make it simple. Dot to dot to dot to dot, okay? And if we start to break the line of resistance, all of a sudden in the shorter term, you're making a higher high. Now, just last week, we actually got to this point right here. We fell down below resistance again. We go down to this low right here. And then what do technicians really call this? And when I say this, I'm referring to, if I can, okay, I'll do kind of a little emerald around it, okay? What do we call that right there? Well, that would be like your classic double bottom, okay? Now, the double bottom then has led to what again? Well, it's really led to the stock breaking to the upside. Everyone's so much focused on, well, the last time we went, it was a failed breakout. Who cares? The first breakout doesn't always necessarily work. We know that. But what about the second one? What if it breaks out of the second one after it failed the first time? What if it fails the first and second time, and the third time it goes up again? You have to say that there's a little tenacity on the stock that it fails once or twice, and it still comes back to the upside. You ever thought of that? We've got to at least give it credit. Now, what we're going to do in this trade is we're going to buy the shares of the stock, okay? Now, not everything's options, okay? Why would someone buy the shares of the stock? Well, they maybe have some capital, okay? Could you imagine that? People have capital? Of course they do. Now, the second thing is, maybe they want something where there's not an expiration. Maybe they want something where there's a higher sensitivity to being right or wrong, okay? Now, what I'm going to do is I'm going to go buy custom with OCO bracket. Now, as traders, we know that if you have a stock that breaks a diagonal line of resistance, we know a lot of times those stocks can swing back up to horizontal resistance. Now, I don't care how many times you heard about it. I want to see how many times you practiced it. That's what it really matters. Now, what I'm going to do is wherever you right-click on the graph, that's the price that it actually starts with, okay? Now, we don't have to do that. We can unlock that little, okay? We can unlock that. And by the way, someone asked me this question the other day at the end of class. What are you clicking on your computer to make it? It's really just in the settings. And when you it's on the settings of the computer, the mouse settings. and you could kind of snap that. This is not like an app. This is just on a PC. Go to settings, mouse settings, etc., and it's just doing that. Okay. Now, there was a question that was asked last week. Now, what I'm going to do is I'm going to set that target right here about 181. Okay. Now, the stop underneath. Okay. Now, this is where the investor, has to understand, like, setting tight stops necessarily isn't always better. Okay. Now, I put the first level at old resistance, new potential support. We haven't had a bounce on that yet. So setting a stop at that support level at 157 and thinking that's the support, that's tough, okay? If we gave it a little bit more room at the midsection of the green candle, these lines, I'm referencing the support levels, the potential support levels. Why do we want to know those? Because that's where we're going to set the stops below. Now, if I took the 154, okay, 154.27 times less 2%, it's going to be 151.18. So if we take a look at this, 151.18, it's really about $10 from there to here. Now, I kind of like to think in my mind, if I take $10 worth of risk, $10, and I always like to think about a percent, okay, 161, it's about 6%. So if we take $10 of potential risk and the stock is 161, it's about 6%. Nothing unusual, okay? It's not outside that realm. Outside the realm for us in the paper money account would be doing an example of greater than 8%, okay? Now, what we're going to do is we're going to change these to data GTC right there, and we're going to go back to the position sizing. Now, I know the position sizing is horrible because if you get the trend right, the investor wishes they would have never position sized. Okay. Now, what we're going to do in this case, let's say the investor, let's say they do 50 shares, okay? Negative 50 shares. This is pretty much going to be the max that we could really do, okay? So trade number 2, AMD, is it a stock or an option position? Well, if there's no expiration, if there's no strike, and it says type stock 3 times or just even once, it's a stock trade, okay? Now, we can go confirm and send. Now, remember how the limit and the stop works. This is saying those orders are not valid until the stock is purchased, okay? All right. Now, Prakash says, I can't see red dot on Cahold. Well, you got to kind of set it there, right? Now, let's kind of go. So what I'm going to do is trade number 2 is AMD, okay? Now, I'm going to go back to the third trade example that I want to look at, and I want to really go back. And by the way, I'm going to kind of pick one here because Prakash asked about I can't see the highs. I'm going to kind of maybe pick one where there might be some highs over time. Now, last week we talked about IBM kind of getting maybe some levels of resistance or getting a reversal, okay? Now, I'm choosing this one for Prakash's question. So if you said it, so first off, if you said, James, I don't have these charts in general. Now, last week I did post those on my X page. If you have not, for example, gone to my X page, let me scroll down on that page where you can also see that. As you're going to see it right, let's go back to, those were actually pretty good. And then if you go back to what we actually posted. So this was a quick video I did from Friday, and I shared that link for those charts. And you're also going to notice that I also said, hey, let me just share this with you right there, okay? And you're going to see that there's the link for that. So this link right here is for the charts that we call the package. If you said I don't even know what you're referring to, go check out X, the chart, the post from Friday, where you could actually, I showed a little quick video of that, okay? Now, what I want to do is let's go back to this. And so if you said on this first chart here, okay, how can I see those dots? Well, let's just go to the little test tube right there, test tube. And if I go to the test tube right there, it's going to show Cahold and CBLOHD, close below the low of the high day. Cahold is the bullish bounce. Close below the low of the high day is the bearish bounce. Who made those actually terminology? I did, okay? Historically, people would call it a bounce, and I kind of was like, well, what constitutes a bounce? Bullish or bearish? And so that's kind of how I categorized that or named it. Now, what you're now going to see is if I click on that little settings gear right there, now, Prakash, yours most likely is off, okay? So let's turn it on, okay? There it is. We turned it right there. We just went to the gear, okay? There, gear. There it is, okay? Toggle it on, bang. Now, what happens now when we bring up IBM, this was a stock that was really kind of going down, okay? Now, if these red dots are getting lower and lower and lower, boo, and lower, you know, if we were going to kind of draw like a diagonal line of resistance, man, connecting 3 dots or so, it'd probably be something like that. Sorry, I drew that manually. If we said, well, what about horizontal resistance? You're probably talking about something about right there, okay? Now, what happens if you break diagonal resistance and you break horizontal resistance? Okay, investors, those people that were short the stock, that thought that it was going to go down, well, they might exit by buying the shares back, pushing it up. Now, if all of a sudden bullish technicians see it break diagonal and horizontal, well, they might try to get it to push to the upside. I'm sorry for the sound effects. It's technically my day off, but I wanted to teach here today. And now you know what it's like to be in my house in the middle of the day by myself. Oh, man. Now, here it is. So if we take a look at this, but I want to teach here today because I'd just be upstairs looking at markets anyway. So if you look at this, that was going to show, okay, the red dots. If we want to take them off, simple, go back to that test tube, click on that gear, and then just flip them back off, okay? That's all it is. Now, let's go back to 2 that I want to add here, okay? I want to go back to Oracle for just a second. And if you look at Oracle, that's really been a name that kind of had the big gap to the upside. And over the last couple of days or so, we've kind of had like a horizontal seaport maybe building a little bit, okay? Now, I'm going to kind of do this trade a little faster on this one because I want to look at Shop and maybe another one as well, and Uber. But what I'm going to do is on this example, on Oracle, we talked about this last week and it expired, okay? I'm going to bring up this Oracle and we're going to try to see if this can't get a little push to the upside. Now, some of you might trade this strategy, maybe not. When we go back to the chart and kind of say, what do we see on this? We see the 10-period moving average, green. We also see, for example, the 20-period moving average, green. Now, we said that we're going to try to be predominantly setup number 2. Setup number 2 is actually getting the 10-period moving average green, number 1. And then number 2 could be a crossover or the moving average, the 20, green as well. And that's what we have. So this is setup entry number 2. We're going to go back to the paper money, click on the trade. And what we're going to do is we're going to try to sell. Now, if we kind of said, look, I'm not comfortable with selling something where the delta is that high. Okay, so let's go down to the 175. Why the 175? Well, because same thing, liquidity again. And what you're now going to notice is if we look at the 175, we're going to sell the 175 and then we're going to buy the 170 or the 165. Why the difference? Well, it depends on how many contracts you could do. If you said I have a smaller dollar account, the investor might be considering the 175, the 170. If the investor said, no, I could actually maybe risk more than $250, $500, they might say, I'm just going to do the 175, the 165, okay? Now, this is the second stock in a row where we've seen the volume here, the volume there. These are probably strikes that just opened up. Why haven't they always been there? It depends upon what the stock price does and also depends upon maybe the interest of market participants. Those strikes are not set in stone. They can add strikes throughout the expiration cycle, okay? Now, what we're going to now do is we're going to sell the 175, sell, then we're going to actually go to the 165, okay? Now, if we do the 165, this is your classic $10 wide spread. 221 credit, 779 max loss, cannot do more than one contract. Now, the good and bad about this is, the good part is it has a max loss built in. Bad part about this, it has a max profit. This is where some stock investors come in and say, I like maybe stock positions where I don't have a cap and I don't have an expiration. But some people like to trade probability. Okay, number 1. They also like to have strategies that have potentially positive time decay, okay? And it's not just, this is about trying to get the direction right to some degree, yes, but it's also trying to get the time decay where the stock stays above the strike and actually has the time decay to go by. Time going by is the only constant. Direction is not. Volatility changing is not. Time, okay? Now, what I'm going to go ahead and do is send the order. Note the commission there. Send it. Now, are there any questions? Taylor actually says, I've been working with the Boyd's 3-condition study. So I like James confirming what he likes as 3 conditions as whole moving averages. The biggest thing is when we talk about the 3, okay? Let me kind of go back to that just real quick, the Uber example for just a second. So when we talk, so a lot of times when you give someone an option of 3 things, you tell them nothing, okay? Hey, you have a choice of 3 different things and they can't make up their mind. Well, this is one, okay? This right here, the moving average actually changing colors 2, and really what you're going to see is that actually moving average crossover there's 3. Okay, now if you have red hair and freckles like I do, and you're Irish, and you like to kind of be more aggressive, you might like to get in number 1. The good part is if you get it right, it could be your very interesting potentially. If you get it wrong, it might just be maybe potentially a quick stop out. So what is the earliest sign? And some people don't like to be early, okay? Some people like to say, James, I like to see a little bit more confirmation. Now, the point is you could take 1, 2, or 3 and be right or completely wrong. It just depends upon how much confirmation you want. Confirmation is not free. That means it's bounced up more and gotten more elevated off the support area and or moving average. Remember, confirmation ain't free, okay? Now, what I'm going to do is we're going to go back to Uber for just a second. And if we looked at resistance, where would you say resistance is on the chart? Calling all technicians. Now, if we take a look at this, okay? Well, if we look at resistance on this chart, you're going to kind of see that we kind of have a couple tippy tops, okay? We're going to see that we have really a high here, uno. Now, I appreciate you, a lot of you saying in that feedback, James, your Spanish has really been improving. I appreciate you saying that. I feel like my Espanol is really doing quite well. Now, here we go. Now, Michael Fairborn last week on Thursday did a class that was very similar to kind of what we've talked about, but it was a little nuanced. It's important to point that out. He did his ThinkScript class. He talked about stock. We talked about stocks historically where they actually break down below support and they snap back to the upside. On Thursday, he kind of talked about a kind of another variation of that where the stock maybe just kind of breaks out initially, maybe it hits a short-term high and then falls back down. It looks like it's a failed move and then snaps back to the upside. Now, we could see clearly on the chart, there's a little Cajole dot right there. This is pretty much what he was talking about, okay? And all of a sudden, if we looked at where resistance was, the resistance was right around 97.10. Now, this is the first time, if we close here, this would be the first day that we've ever had the body of the candle above the resistance. Check, if we can close here. Second, if we also actually get the closing price above the open, hence a green candle, this would be the first time we've actually had that. Now, on the second day of the breakout, it's not unusual that the stock pulls back a little bit. What I'm going to do in this trade is we're going to buy the shares of the stock. Try to. And then what we're going to do is look and see, could we maybe even do like a covered call? Now, remember, a covered call is directional to a point, yes. But the biggest actually thing, and I'm just going to check this liquidity for just a moment. Now, we're not going to look in October. At least in my paper money account, I'm not seeing any open interest here. The open interest is in November. So what we're going to do is step number uno here. We're going to buy the shares of stock. We need 100 shares of stock to do a covered call, okay? Hence covered. Now, step 2, we're going to go down to single order. First triggers execute, check, okay? And then what we're going to do is we're going to say, look, we're going to sell a call, a strike, where we think there might be probability on our side. Do you like to be right? Sure. Okay, now, it's not 100%, okay? But if we sell the 110, statistical odds right now, 34% chance to close above the strike, 66% chance to be below. Some investors kind of like to actually target between 30 to 40. We're going to sell that put call right there. Now this trade, buying shares and selling call, that is your classic cover call. Max gain. It has a max loss in place, but assumes the stock goes to zero. The call is not a put. You got to understand that there. That's the difference. Now, we're going to also put that trade number 3 on. So we did the example of NVIDIA. We did the example of AMD. We did the example of Oracle. And we did the example of Uber. I said 3. That was actually 4. Okay. Now, I'm out of my time here today, but I want to kind of show those trade examples here today. Our focus, our theme was really talking about diagonal resistance breakouts. Okay. Now, remember with what we talked about here today, if you enjoyed today's class, you could actually just fill out the survey. Just 2 questions. If you'd like to actually leave some feedback for me to read, go ahead and read that or do that first thing in the day. Thank you in advance for that. I'd also like to say thank you for Rachel for answering those questions in chat as well. Do not forget to subscribe to the Traders Talks channel. It's free. Join us there. And also remember that coming up next, we have Michael Fairborn, don't forget Michael Fairborn's class on the ThinkScript on Thursday. We also have Cameron May coming up next on covered calls and short puts. Then Connie Hill on ETFs. So join us for our next 2 classes coming up. Now also remember that all investing involves risk. And with that said, I wish you a great day. I'll be back on tomorrow at 11 a.m. Thank you and have a great day. Stay tuned for Cameron. Bye-bye.